Well, hello everyone and welcome to this Supply Chain Finance Community webinar. Our topic today, new ways to finance SMEs, how data is driving a fresh approach. Great to see so many people logging on from all over the world, and congratulations to those of you in the Americas who are logging on at times that to us in Europe and Asia seem ridiculous, but congratulations, and particularly to one of our speakers who I'll introduce in a moment, who has promised to be lucid even though it is stupid o'clock in the morning, his time. So for all of you, thank you. A few housekeeping points before we start. On the right of your screen, you will see a questions area. If you have questions for our panelists, you can type those into that field. I'll be monitoring those and I'll ask the best of them to our speakers at the end of the webinar session. There's also going to be a poll and you can vote in that, and the results I will reveal to you during the webinar. And the last point is we record the whole thing, and within a couple of minutes of this webinar finishing, the full recording will be available on demand at exactly the same link that you used to get here. So if you want to share it with colleagues, feel free. It'll absolutely be available to all of them. So I'm Mike Hewitt from Adagio Media, and I'm the moderator of today's event. Many of you will know us from the Supply Chain Finance Community's many live forums that we've held over the years. Of course, this year slightly different, although we are back live in Amsterdam in November. So do get ready for that re-emergence of the live event. For now, we're all online, and we have some great speakers who are joining us. From Fraunhofer, a board member of the Supply Chain Finance Community and a great friend of the SCF Forum over the years. You may have seen him speak on many of our platforms, Michael Henker. From InfoNexus, we have Gary Schneider, and Gary is the man who is indeed getting up, especially in the middle of the night, to join us. So extra special thanks and praise to Gary for that. And of course, this webinar would not even be possible without the sponsorship of DBS Bank, who are doing some really interesting things in the area of connecting data and using data in new ways. Many of you that joined us last time will have seen how the bank is using APIs to link to corporate sources and onboard customers faster to supplier finance programs. And Amit Agarwal is here to talk us through some of the ways that DBS is engaging with this idea of using alternative sorts of data. So really looking forward to that. So why are we all here? It's a very good question. And I'm going to take you back to 2018 and a little chart from Moody's. And even then, Moody's was saying that using alternative data was long seen as desirable. And back then, Moody's talked about some of the types of data. Conventionally, you might use financial data, you might use loan payment behavior. But what if you could use other metrics like characteristics of business or social media input or location, all sorts of other pieces of data that might help in credit decisioning. But it was seen as desirable, and it was always an idea that perhaps was a little bit ahead of its time, in much the same way that many of us weren't sure we could work from home and connect seamlessly as we're all doing now without a problem. In 2017, IFC talked about the amount of data that was out there, the world's stock of digital data, it said was doubling every 2 years, and that by now, 2020, 60% of that data will come from developing economies. So there is a colossal amount of data. It's getting richer every day, more and more terabytes of data about every individual and every business. Surely it's possible to use some of that data to help support smaller suppliers who may not meet the normal criteria for funding in terms of their balance sheet or other conventional ways of assessing credit decisioning. So how can we help? Let's find out first of all whether anybody on the call is using this data already. So if you're a vendor or a bank, if you go to the polls area now, you can vote on this simple question: are you already using alternative data sources for credit decision making? The answer may be yes, very simple. You could answer no, but we plan to, or you could say we don't like that idea at all, so we're unlikely to. So if you'd like to vote, and while I'm afraid you can't see it, I can, and I will publish this at the end of the poll. I'm currently seeing that about 55% of the people who voted so far are seeing alternative data already being used by their own organizations. And is that changing? Yeah, now we're about 50-50. So the yeses and the no, but we plan to, are just about equal. Nobody is saying they're unlikely to. So in this group we have today of several hundred people from around the world, generally speaking, we're all either using or likely to use alternative data. And even as I speak, 2 people have said that no, they're not. Well, I hope you're in the right webinar. Stay with us. You may have your mind changed a little bit later on. So that's a brief introduction to our topic. But for a much better overview, I'm going to hand you over now from Fraunhofer IML to Michael Henke. Michael, in this COVID situation, it's changed everything, and it's changing the way we think about a great many things. Perhaps you can take us through what you've seen in terms of how we've gone from COVID to better use of data.
I do my very best. Thank you very much for the introduction, Mike, and hi everyone also from my side. I will talk a little bit about the role of digital technologies as a base like IoT, blockchain, artificial intelligence in managing financial supply chains in the current situation. And at the beginning of my short presentation, I just put together a couple of current coronavirus numbers. I must admit, I did this collection of numbers 2 to 3 weeks ago. So I guess today they are a little bit untopical, so to speak. So the whole situation is probably even worse. But what's still the case is that the global growth is at risk. We see significant negative growth rates. The expected drop of world merchandise trade volume is in a pessimistic forecast, over 30% down. In an optimistic forecast, even more than 10% less than we expected it at the end of last year. More than, I would say nowadays, 100 countries introduced export prohibitions, restrictions. More than 1/3 of global population is under lockdown measures. And if I look at it from a German perspective, where I'm from, the largest decline of export expectations is seen since our reunification. And if I look on the right-hand side of the chart, on the lower right-hand side of the chart, at logistics key figures, then we see that there is the biggest drop in truck mileage ever recorded these days. Even the increase of e-commerce brought up more trucks on the street. We see really this huge drop in truck mileage overall. So this is just a selection of a couple of current numbers. And the question is, how does these numbers impact trade finance? And what are the recommendations for action in the next weeks and months to come? And if you look on the left-hand side of my chart, you can see, and all of you agree, lockdown measures and health prevention challenges paper-based and manual processed trade finance. So we have to ensure exchange of trading documents. We have to also ensure the handling of expiring contracts due to supply chain frictions by the adaptation of compliance and regulatory procedures. In the light of the upcoming second or third wave of the corona crisis, the uncertainty will increase, not only in the physical supply chains, but also along the financial flows. They are under strain. And that's the reason why we have to ensure efficient, secure, and transparent supply chain finance by, for example, digitizing payments. So that's the right moment to really come one step further towards digital money based on distributed ledger technology. At the same time, at least this is my personal opinion, the overall supply chain game is not really changing. So just-in-time remains as production system. There is an increasing need for tracking abilities along supply chains to create transparency. And transparency is a very important requirement for supply chain finance solutions. I will come back to it a little later. So all in all, I see as a positive side of the COVID-19 crisis, technology push. The corona crisis is, from my perspective, a technology accelerator. So for different global digital trends like mobile transactions, between also machine and machines, 3D printing, 5G, and many others, So we have to, for example, for additive manufacturing, build infrastructure to temporarily provide construction details instead of physical trading. And this technology push does not mean that we have to push the currently hyped technologies like AI or in the future quantum computing. It's more like that we have to connect all different technology trends. This is at least what we do in logistics and supply chain management that we see currently and that we have nowadays at our fingertips. So at the science location in Dortmund, where I'm from, we really try to combine all the different things like blockchain, like Internet of Things, like big data, artificial intelligence. And this is just a selection of technologies that we deal with since a couple of years. We put all of them together, and that's the reason why our imperative of thinking is an integrated one. So we combine the technical level, the technology level with the operational level, with the business level. And this leads to what you can see in a very simple picture on the right-hand side. It's more sophisticated in another version, but for the sake of the webinar, I chose the very simple one. We combine IoT, for example. We combine smart European pallets that have trackers on board that collect many, many data with the blockchain technology. Based on a blockchain, we can negotiate on the base of the data. We can book and store the data. We can pay based on the data, integrating smart contracts and cryptocurrencies. And by this, we can optimize and orchestrate logistics better than ever before. And this is, as an IT architecture, the base for cloud solutions, for platform solutions, for mobile apps, and many, many more things. The whole idea behind this silicon economy is a complete virtualization of value creation processes. It's a data value increase that you can see here. And maybe it's important for you to know that the IT architecture, the base for the whole thing, is developed from our side open source, because we think that's the chance, especially in Europe and for sure also in Germany, that we really put all our developments open source so that collaborators and even competitors can make use out of this developments and can further develop it. And this is also reflected in the term, if you want, silicon economy. It's not by accident quite close to Silicon Valley, but the Silicon Valley, as all of you know, stands for B2C, B2B, and especially in logistics, companies like Amazon and Alibaba are way ahead of us. So there is no chance from, let's say, a European perspective to catch up. But in the B2B environment, and that's our main focus of the silicon economy, we still have a chance to compete with the others, but we need an open source environment. And this leads me already to my last slide, because now the question is how we can involve such a supply chain ecosystem in supply chain finance. I already mentioned that we have the increase of the value of data by sharing them in the Internet of Things. We book and store them on the blockchain, and at the same time, we can ensure security, speed, and compliance with legal requirements while implementing smart contracts on a blockchain. And this, in total, helps us to integrate the material, the information, and the financial flow. Linking physical and financial supply chains via blockchain, IoT, and AI is nowadays possible. We discussed this since many, many years, but nowadays we have really all the technologies available. And by this, we can really transmission the reliable information. And this leads to increased transparency and visibility along supply chains. And that's, at least from my perspective, the base really for the next level in supply chain finance. So we can further develop reverse factoring to supply chain faster than ever before, so supply chain finance. This enables adoption and integration of new business models, and at the end allows more SMEs to be financed quickly. Or in other words, that's the base for new ways of SME finance. Thank you very much.
Thanks, Michael. Really, really helpful. We've got a great introduction to the way this supply chain ecosystem is developing. We've got a couple of questions that have come in straight away that are quite relevant to you. Would you mind just maybe having a shot at one of those right now? And it's Tapan Agarwal who says, you mentioned distributed ledger technology, and he points out, not unreasonably, has there been any mass adoption? Because we hear a lot about proofs of concept and trials of this. What's your feeling on how close we are to the mass adoption of distributed ledger technology across financial services and supply chains?
I'm with you. I would say for the time being, we see more proof of concepts than really scalable, broad applications. But let me put my answer like this. I think the biggest potential of blockchain technology is still ahead of us. And the main trigger is the combination with the data from the IoT environment. And as soon as we really manage this combination and linking the IoT world with the blockchain world, we will really see the next level of distributed ledger technology use all around supply chains worldwide. And our system is the necessary step to make this going and happen.
Makes absolute sense. I can see other questions coming in. We'll come to you later on in the session. But for now, thank you, Michael.
Thank you very much.
Time to move on then to our next speaker from Infor Nexus, doing some really interesting work, particularly with DBS in using these alternative data sources. Gary Schneider, over to you.
Great. Thanks, Mike. 25 years ago, the World Trade Center Association began with an idea to help SME suppliers all over the world. And from that idea, Infor Nexus was formed in 1999 under the name of TradeCard with the mission to simplify international trade finance. The vision was a paperless, connected world where supply chain data was managed in one place in the cloud, wrapped with workflow and analytics to allow companies to automate functions that have been extremely manual and to provide visibility to supply chain events that in the past had been impossible to see. The goal was not just to connect a buyer to their largest suppliers, but it was to make sure that we can connect buyers to their entire ecosystem so that all of their suppliers, large and small, were paid on time and had access to financing. As Michael said, COVID has wreaked havoc on businesses and within supply chains. And it has pointed out to companies exactly where they are on their digital journey. Companies who were in the early stages quickly realized how reliant they had become on manual processes, paper documents, and Excel spreadsheets. Companies who were a little further along were thankful that their staff had online visibility to where their goods were and the cash needs of their supply chain. And the companies who had made the most investments had the most options when it came to maneuvering their inventory, as well as maneuvering their working capital to the suppliers who needed it most. Now, these are the companies who established network connectivity to their entire ecosystem. And Infor Nexus is a network of buyers and sellers and banks and logistics companies collaborating on each step in the transaction lifecycle, from plan to purchase order to eventual payment. And of course, all of these transactions can be financed at varied points in the supply chain. And during the COVID crisis, as supply chains adjusted to reduce demand with slowdown of shipments and payments, Infor Nexus have been helping to inject capital within our supply chains, our client supply chains, to thousands of small businesses across the globe. And in many cases, we were offering new forms of capital to suppliers, large and small, literally overnight. And we were able to quickly onboard these new programs because of the network, because the buyers were connected, the suppliers were already connected, and the financing providers were already connected to the platform. And by having this network of providers, we were well situated to handle suppliers in varied jurisdictions and within communities of varied credit conditions. Now, one of the challenges in providing financing to SMEs is often the banks only want to focus on the larger suppliers because it's just hard to onboard smaller suppliers, and it is less rewarding at times. But at Infor Nexus, it is important that the buyer's entire ecosystem is connected. So because we're already connecting them and making sure that that happens, we put a dedicated team in place that focuses on supplier onboarding, and it ensures that we get all the suppliers, including the SMEs, in the long tail. Now, in every industry, we are seeing companies investing in their digital supply chain strategy. And it was actually our earliest customers that told us that moving beyond the financial events to include supply chain events was extremely valuable. And it was this feedback that really set us out to link the physical and financial supply chains in ways that had never been done before. I mean, this was 15 years ago. And, one example, Columbia Sportswear, who had been seeing great savings in accounts payable as the document matching process was automating that process for them. But it was really over time that the sourcing and logistics and customs folks really began realizing that the information being managed for the financial supply chain was the same data that they really wanted to see on the physical supply chain. And in fact, they wanted more data. They wanted more events from production and from fulfillment. And it's these added milestones in the physical supply chain that ultimately are becoming, in my opinion, the gold in the hills, because this is where the financial institutions today are really looking for this supply chain information, these key events that are happening, and it's really allowing them to make these financing decisions for small to mid-sized suppliers across the supply chain based on their historical performance with their buyers. Now, as I've said, this financing platform is not focused on just solely on approved invoice financing, but really by managing the whole transaction lifecycle, suppliers can receive cash at the time of purchase order, at the time of production, or at any other event along the transaction lifecycle. And for the financing partners, risk is then lowered as the workflow is governed by one set of rules and the documents are pre-populated with data from other parties. And in addition, the platform can look at historical data and really predict outcomes. What I mean by that is, we know when a supplier creates their PAC plan, for example. We know when they create their commercial invoice. We know when the buyer approves that invoice and pays that invoice. We know the dilution rates. We know the rejection rates. And we know if the invoice is hit with a chargeback, lowering the amount of the eventual payment. And we know how many days in between each of these steps. And this is the type of data that our strategic banking partners like DBS are really interested in and want to focus their financing on. So how does this all happen? This is our simple flow. Buyers sending in purchase orders from their ERP system, suppliers large and small. Large ones might be connected via the EDI or some form of an interface. The smaller suppliers able to access the web, view their purchase orders, submit their PAC plans, their packing list, their commercial invoices. Cargo receipts eventually are created by the logistics partner and transmitted to the platform. And then in step 5, really this electronic documentary compliance step, matching all the documents that were received against the rules that the buyer established. And most invoices, because of this automation, will be approved by the engine within 24 to 48 hours. And this is fantastic for the suppliers, particularly the small to mid-sized suppliers. They don't have to wait a week or 2 weeks for those documents to get matched. They have an approved invoice. And if necessary, they can get that financing right away within days of that accepted invoice. Now, I spoke about predictability, and I want to just take a moment to look at some of the data directly from our production system. We had a buyer recently looking to offer suppliers a chance to get financing who happened to be using the Incoterm of DAP. DAP stands for delivered at place, which means that invoices would remain outstanding and unapproved until the goods were delivered, and then the invoices would be approved. And this buyer was looking for financing partners who would finance that period from invoice creation to invoice acceptance, and then from acceptance to maturity. And this is the data that we were able to pull, and you can see how predictable the payments were. 99.6% of the value of the invoices at time of creation were paid 76 days later. And this information really can allow banks and DBS to structure a program that they can rely upon that flow, and there's a real predictable set of data that goes with it. So in conclusion, all the data and all the technology can only get you so far. you still need to be sure that you can service all the suppliers in all the jurisdictions, even those small suppliers that might be in a remote place that, you know, some banks may or may not cover. So you really need to make sure that you can handle those small to mid-sized suppliers in distant places. And you still need to have the onboarding team and an overall program strategy to really reach all the suppliers, including the SMEs at the end of the tail. Thank you for your time today, and I will hand it back to Mike.
Thank you very much, Gary. So enormously interesting, and as you can see, we have a question which, if you wouldn't mind, I'll share with you right now from Daryl Lewis, who's essentially asking whether the global pandemic has accelerated the uptake of technology. We all know that before the pandemic, there were still plenty of companies who were relying on essentially manual processes, particularly around trade finance. Are you seeing that people have perhaps accelerated the move to the digital world, and that, I guess, makes your job easier in capturing that data and using it for decisioning?
Yeah, we've seen far more interest in the last, few months. Certainly, a lot of companies who maybe in the past were not ready to automate different parts of their supply chain, but clearly what's been happening with COVID and inability to travel, inability to get your hands on paper documents, and people making decisions based on spreadsheets that could take days and days to put together, and by the time they come together, they might be old news. So we're certainly seeing a lot more activity. We're able to connect new clients. So we've recently gone live with a few new clients that came into the program just after COVID hit. So I think this is really spurring and making sure they start out with the digital maturity curve. Companies are really taking that hard look and realizing that, look, if we're going to survive, and we need to compete, and we really need to be as efficient as possible and ready for the next. This is not the last Black Swan event. There's going to be more events to come, and companies know they need to get ready for it.
Great, and thank you for that. We're about to turn to Amit Agarwal for DBS's point of view. Just a reminder, if you're using that questions tab, you can upvote questions, so I will try and ask the ones that get the most upvotes. So if you see someone asking a question that you'd like answered, let us know, and I'll put the best of those to our panelists. But while you're considering that, it's now time to look in more detail at what DBS Bank has been up to in this space. So Amit, over to you.
Yeah, thank you, Mike. Before I start, I was just reflecting on this webinar with some of the actions that we have been taking in the last 27 minutes. So just bear with me for a couple of minutes before I start to explain the slides that we have. I noticed for the first time, it's not only that the audience knows the presenters, but the presenters also know the audience. I could easily scroll through the guest list and the people who are attending on the right-hand side of the webinar, and I can see many friends and colleagues. So good morning, good afternoon, and good evening to everyone. The other thing I noticed was that usually in the traditional seminars that we would have a person or attendant running around with a mic and try and reach that person so that the person can answer the question. It would take a few seconds, which now in this webinar crunches the time that is available. So maybe you can push in more questions. So very interesting. And lastly, I'm sure many of us, when we are attending this webinar, are also multitasking. So it's not necessary that we are only doing one job at a time. We can definitely spend more time doing multiple jobs. And this makes me think of how the world is changing and how these simple concepts can be applied, to our businesses as well. Do remember these 3 points. I will come back when I'm explaining the slides that we have. Okay. So thank you, Mike, Michael, and Gary. And in touching upon the topics that we have just covered, essentially what we're trying to solve for is how can we get more financing to SMEs using some of the data which is now available through multiple technology platforms and solutions like an IoT, 5G, or blockchain. Okay. So to share what we have already done and commercialized is essentially outreach to various tiers of suppliers. Traditionally, as you are aware, most banks or financial institutions would be very happy to fund the top tier suppliers. Okay, there was a lot of manual effort which was required to onboard the suppliers, a lot of time taken, and then banks or financial institutions would try to make the big bucks, right, and look at the more larger suppliers than at the end of the chain. And that's where I think the deep tier concept came into play, where technology helped play a part and reach out to almost all the suppliers for the anchor, rather than the financial institutions concentrating only on a few select ones. What we have done is we have tried to go one step further, okay, which is essentially not only cover the tier 1 suppliers of our anchor, but beyond that, the second tier, the third tier, the fourth tier, that is the suppliers. How have we done that? So what we have done in China is that on a technology platform where e-procurement or procurement of goods are happening between the buyer and the seller, once the trade has been completed, the buyer would come on the platform and provide an irrevocable payment undertaking, okay, which we would call an electronic irrevocable payment undertaking. Okay. Now, this EIPU, which is confirmed or issued on the platform, is then transferred to the first tier supplier as a form of settlement. It is up to the first tier supplier to decide whether they want to take that EIPU to a bank like DBS and discount it and get an early payment, or they use that particular tool or EIPU to pay off their suppliers. So in course, what happens is the initial EIPU is being transferred from the first tier supplier to the tier 2 and onwards to tier 3 and tier 4. At any point of time, given the maturity date within that EIPU, any of these suppliers can come to a DBS bank and take financing. So therefore, through this solution, we have been able to reach out to not only all the suppliers within the ecosystem, but even the nth tier. This all has been made available through the blockchain or DLT technology, which essentially ensures that when the EIPU is raised and then handed over to multiple tiers, a trail is established. And that trail, and leveraging blockchain or DLT technology, ensures that the data is correct. And when the nth supplier is coming to the bank, we can trace back as to how the EIPU was raised and how it was transferred over to the person, to the entity which has come to the bank for financing. So definitely a very good use case for DLT, which we have gone live and is already operating in China with multiple anchors and multiple suppliers. The other thing I would like to highlight within this solution is the convenience to suppliers. Through not only enabling the instrument to be moving from one supplier to the other, the suppliers also don't need to come to the bank to establish a physical account or to establish a connectivity. There are already APIs built in through messaging. The APIs can activate the supplier account, facial recognition for KYC, and all other features are available to ensure that the convenience to supplier is very high compared to a traditional supplier finance or banking facility. So that's where the fully digital onboarding versus the physical onboarding is a difference. So combined with these two solutions, where there is an improved efficiency for anchors, there's a convenience for suppliers, and the reach out to mass suppliers, we have been able to roll out this solution. And we're proud to say that we're the first foreign bank to be able to do so. And this is really a market-leading solution, which we're trying to replicate across. So that is one of the first use cases which I wanted to share with everyone, as how we are trying to innovate and provide financing to SMEs. I'll move on. Sorry, that was double click. I'll move on to the second use case. Now, this second use case is still, I would say, in production. We haven't yet rolled it out. But I would, again, just go back to basics. Traditionally, it's always the customer coming to the bank. If the customer wants financing, they would prepare some reams of paper, approach the bank, request for financing. The banks would look at the documentation, the transactional data, etc., look for KYC docs, and then approve a facility. So it was always the customer coming to the bank. What we're trying to say is, how can we make this reverse, where the bank goes to the customer while the business for the customer is still ongoing? And that's where we call supply chain autonomous financing. What it means is, and I'll take an example to explain how the supply chain autonomous financing can work and reach out to mass number of suppliers. So let's take a scenario, and let's take a supermarket. So in this particular diagram on the right-hand side, the end consumer is people like you and me who are going to a supermarket and buying goods. And there could be various such small supermarkets, outlets across the country, across the globe. And obviously now these are all connected through IoT and hopefully 5G, where any reorder levels would automatically be sent across to the warehouse that the buyer, that the supermarket holds. They also would have a procurement platform where all this data is collected. Okay. What we are saying is that we are trying to attempt to connect to this network of information which is being shared between the end customer when they're buying goods, to the reorder levels, to the warehouses, and therefore to the bank as well. And through this information, we can enable a pre-shipment financing. Okay. So for example, the traditional process would have been that once the reorder levels have reached at a buyer warehouse, they would then issue a PO. The supplier would then take the PO, receive the PO, and then come to the bank for financing, right? What we're saying is, no, that's no longer needed. As soon as reorder levels are reached, maybe at a supermarket outlet stage, and there is a need for the supplier to start production, the information is already available with DBS or with any other bank to be able to start financing the supplier. So how do we enable this or bring this to the customer? Instead of the supplier coming to the bank, we aim to build an application or a tool which can sit with the customer or the supplier. It can sit on the procurement platform. It can sit in the Apple Store or the Play Store, and as a plugin where the supplier can download, and subject to consent, subject to the consent, all the data that the supplier has on the network with regards to its purchase and sales can be shared upfront with DBS. So at any point of time, that information is available with DBS, which we are using our credit models, enhancing through AI technology to be able to upfront have a pre-approved line ready for the supplier in case the supplier needs financing. So as soon as there is a shortage in one of the outlets, the supplier gets a pop-up, a PO is coming your way, and therefore, if you want financing, this is the credit line that is already available, which you can take finance against. This again reduces the turnaround time in terms of how much the supplier can procure from the bank and start the manufacturing process. Obviously, it will help because we aim to have that application or plugin available to everyone. Yes, depending on the credit appetite of the bank, the application may alert or may not alert a specific supplier for the financing, but it's already available on demand. So therefore, it will help SME suppliers in optimizing. It truly will speak about just-in-time financing, connecting with just-in-time supply chain as well, right? We expect this to be kind of a very low-touch, very few clicks, in terms of getting the financing across to the supplier, and definitely the data which is provided, through IoT, 5G, and the network will be useful for us, to take our credit decisions. So that's what use case we are working on, and hopefully, once we are able to launch it, we'll be able to reach out to many such suppliers. At this point, I would just try to recall the first three, I would say, reflection I had at the first 27 minutes. I said it's now possible to know all the audiences. Now, how is that possible? Because of digital technology. Earlier, we don't know who's out there. So I would just take a simile and say, earlier we don't know who the supplier was, what they were transacting, how they were transacting. Now that is made available through IoT and 5G. And yes, I can take, or as a bank, we can take certain decisions, whether it's a good morning, good afternoon, or a good evening that I need to greet people with. Okay. The second thing we spoke about multitasking. Now, what happens is the supplier now can actually multitask at the same time. They don't really need to spend resources and time for a person to reach out to a bank, do certain activities. The financing will work behind the rails when they do their business, and multitasking is possible. Again, how is multitasking possible? Because we are in a digital world. And finally, I think the third one we touched was the time taken. The time taken for the attendant to reach out to a particular audience, the question being asked. Again, if you look at our economy, all aggregators, all fintechs, all technologies are trying to reduce the turnaround time that we have in our services, because time, shortening of time means much more business, much more profitability. Imagine a supplier, who would get a PO 2 days later, and then take another 5 days or 10 days or a month to get the financing, can immediately start production if the financing line is already available at a transaction level. And that really moves the operating cycle of the corporate, of the supplier, as well as the whole industry. So I guess we are in a very exciting times where digital and technology are changing the way we live, we breathe, we operate. And frankly, I am very comfortable in saying that we are going to have solutions and technologies where financing can be made available to a vast number of SMEs. I'll stop there and hand over to Mike.
Great, Amit, thanks very much for that. I mean, really, it's so interesting to see how some of the ideas that, well, you and I were talking about, let's say 2 years ago at SCF Forum Asia, are actually now happening, which is tremendous. Now, in terms of questions, all of you will see that there are a lot. So I'm going to concentrate on the ones that have the most upvotes. And I guess one of those is from Emuel Showman, who asks, and I'll give this to you first, Amit, and then to you, Gary, if that's okay. He asks, have large banks been more willing to provide pre-shipment finance as a result of the maturity in this technology? And I guess he's asking specifically about Nexus and your tech. But Amit, since you're on stage now, let's ask you first. Is this technology really allowing you to be more willing to provide that pre-shipment finance than you were before?
Yeah, definitely. And I would add, by 300%, the banks have more visibility. We exactly know when the goods are moving out from the warehouse, what is the historical information with regards to the purchase orders canceled. Gary showed some data and statistics which we didn't have access to. So such data and statistics really change the evaluation and the credit model that unfortunately we didn't have. So earlier we didn't know what we didn't know. But now, given that we know all this information, it really improves our ability to take more credit and therefore extend finance.
Great. And I can see we have specific questions about the EIPU, and I'll come back to you in a moment for those, Amit, if you choose to answer them. But on this question of whether banks are more willing, in a moment, Michael Henker, I want to ask you for the European perspective about whether you're seeing this, the availability of data beginning to influence finance providers and whether they're more willing to act further down the supply chain. But I guess, Gary, you're at the sharp end of this. Are you seeing your technology already encouraging banks to be more willing to lend?
Yeah, certainly on the pre-shipment side, there's a lot of most banks are out there and willing to do the approved invoice financing and take the risk of the buyer. But I think that market has become quite busy. The next frontier, the next open business has really been going downstream. And I think, DBS and a handful of other banks are really interested in, as I said, going downstream and to the first tier, maybe going down to the next tier of financing, and certainly leveraging all the data. I know that, from our perspective, the fact that purchase order is real because it came out of the ERP system of the buyer, and we can prove that with digital signatures and as well the data that we then gather from the supplier as they go through production. So I think all of this information is becoming and more valuable, and certainly is becoming, quite interesting to many of the big banks around the world.
Great, thanks for that. And Michael, I guess from that European perspective, you've already told us about some of the really interesting developments in terms of the Internet of Things and the use of distributed ledger. Is that feeding through, in your experience, to the finance providers? Are they beginning to be more open to some of this finance provision much earlier in the supply cycle?
It depends on which financial service provider you think of. So I would say there are a couple at the top of such developments. So we, for example, work together in an enterprise lab with the Commerzbank and deal there with great finance innovations. And for sure, we do a lot of joint developments exactly towards that direction. There are a couple of others that have to catch up, definitely. But I do not want to only look at the financial service providers, the financial industry. We need also an openness and willingness, capability on the SME side to really do this digital transformation now. And COVID-19 pushes the digital transformation for sure, but we have now to really be very strict and consequent to drive this forward. It's not only just putting paper-based documents as a PDF and send it via email, right? So we need really the digital transformation and really need the adoption of, for example, blockchain technology in SMEs. And there is a long way to go still, I would say.
So 3 perspectives there from 3 continents. Sadly, time is against us, but I want to get to a very upvoted question. Doug Scott of Siemens has asked, a lot of interest actually, Amit, in this idea of the EIPU. And Doug asked, do you treat it as a value token? Is it transferable in whole or in part to any trading partner in the chain and convertible to any currency? I should say we have other questions on this on a very similar topic. Some people asking, for example, if it's open to perhaps a little bit of further down the chain. Could it be used twice? Might you have? How are you managing that process? First of all, is it a value token, and how worried are you about the possibility of people a bit further down the line, perhaps using it more often than it should be used, to put it politely?
Yeah. No, so definitely the right questions, and some of these questions is what we went through when we're looking at the product and rolling it out. Frankly, we do not want this to take shape as a pseudo currency. We don't want this to be open-ended. So frankly, this whole solution works in a very closed loop, which is essentially on the platform itself, accessible to the only anchors and suppliers, for that particular trade. So definitely, when we are financing any of the EIPUs, there has to be sufficient information backing the underlying trade. It is not that the EIPU can be shared by the tier 1 supplier to any particular person. It has to be or can be only shared or transferred to the tier 2 supplier for genuine goods movement. And that information is already captured on the platform, which acts as a control to ensure that this is being used only for legit trade purposes, backing the ultimate trade. So therefore, it's only open to those specific suppliers who are supplying a material leading up to that trade that we are financing.
Okay, makes absolute sense. Apologies to everyone who's asked questions that we just don't have time to get to. Great to have your input, and we absolutely will review those. And it may be that if they're specific to some of our panelists, you might get an answer afterwards. Just a reminder: the recording of this will be live literally a minute or 2 after we finish, so you can go back and see how great all our panelists were again. If your day is not full of other things. And if you're desperate for your next fix of supply chain finance community information, really interesting one next time. And again, it's on this theme of how do we move supplier finance into different places in the supply chain other than that tier 1 supplier. Our next webinar is on Thursday, August 27th, and it's on distributor financing. So how do we move to the other side of the supply chain and finance those people who ultimately are going to move our goods and services to market? So for now, I'd like to thank our panelists. Tremendous presentations. Thank you all. I'd like to thank all of you for being online today at whatever hour it is in your part of the world. Look forward to seeing you next time. Most of all, I hope we can all meet again very soon in real life. But for now, stay safe, and we'll see you next time. Goodbye. Bye.
Bye.